Hello and welcome back to our weekly PWM Tea Break here at the FT Studios alongside my co-host Yuri Bender. Joining us this week is Kim Cornwall, formerly a banker at SG Hambros and now coaching relationship managers. Kim, how are you?
I'm really good. It's a pleasure to be here today, Ali.
Fantastic. And what tea have you gone for this week?
I'm a straight shooter, and normally what I have at home is what I'm having here, good old-fashioned builder's tea. Just
Fantastic.
love it.
And Yuri?
Well, I'm sticking with the fair trade tea this year for the first few weeks of the year at least, as I attempt to live a more healthy and virtuous lifestyle and to be good to my neighbours, although I cannot guarantee how long this is going to last. I mean, the whole notion of moral leadership is becoming increasingly important to us, Kim, after Elon Musk, one of the world's most powerful business figures, is making outrageous claims about the UK government on social media. And we have a wonderful opinion piece from Malik Sarwar, who you know well, a consultant who used to work for Citi and Merrill Lynch. Now, he's saying that when he joined the industry as a bright-eyed recruit 40 years ago, it served the banks rather than the clients. In 2025, he feels despite claims of being client-serving, without serious reforms, the industry will remain self-serving. What are your thoughts on this debate?
I'm going to turn back the clock nearly 40 years when I was a relationship manager. And I cut my teeth at Merrill Lynch with Malik at the same time. And we had it drilled into us day after day after day. And the mantra was, the customer's interests come first. And we did do that. Every time we wanted to make an important decision, it was, does the customer's interest come first? And believe it or not, it served us very, very well, because it was known in the industry that this was the attitude of Merrill Lynch. And so it brought customers, it helped us grow assets, it helped us open doors. So I think if we have that mantra today, it's fantastic. If banks and financial institutions can be guided by this, the customer's interests come first, it will serve them well.
1985 you're talking about. I remember it well. And one of the big hit records of that year, Smooth Operator by Sade. And I bet you were a smooth operator. You still are, Kim.
You have to ask my wife about that, Yuri. But those were good times, I must say. And they were good times for private banking. And I think today the private banks, they're in a bit of a dilemma. They want to serve their customers, but at the same time, their shareholders are saying, we want a return. And so they have this delicate balancing act of serving their customers and delivering returns to their shareholders. My feeling is that if you look after your customers, the returns to the shareholders will automatically flow.
And Kim, you're talking about a major dilemma. And Ali, there's a major dilemma which you've been writing about, a moral dilemma for investors in the Brics economies, whether to invest in them or not. What have you found in your research?
Well, Yuri, I spoke to EFG International, a Swiss private bank, and they see the Brics. They see it could emerge as a key driver of growth in 2025. And you know, the Brics are home to 45% of the world's population, 37% of global GDP. So, and according to the views of EFG, is they're set to outpace advanced economies in the year 2025.
Although they are saying not to invest in Russia because there's too many issues.
Yeah, because of the issues with the war ongoing at the moment. But it's not just their sheer size; it's also the growth as well. You know, they're set to grow at an above global average this year. So let me give you an example. In 2025, the USA is expected to grow at 2.2%, whereas China is expected to grow at 4.5%. And, you know, investors' minds are increasingly focusing on the Brics. And so they see, you know, a lot of potential because of the prudent fiscal management of some of these countries.
Ali, I agree with all of that. But a lot of family offices have pulled out of China because they don't agree with the moral stance.
Yes, and so that's why there are a lot of experts saying you've got to look at these countries differently. You've got to, you know, look at it kind of country by country. So you've got China, which is it's a state-led model, and you've got India, which is more democratic. So from an investment point of view, it's best to look at these on their individual merits and their demerits. And Kim, In your opinion, which ones do you feel are investable out of the BRICS?
Well, the BRICS is Brazil, Russia, India, China. We know that Russia is off the table, at least at the moment. Hopefully the war will end in Ukraine and maybe we can revisit this. So Brazil, it's gone from a very right-wing government to a more socialist government under Lula. And Brazil has been very cyclical in its nature for the returns. At the moment, Brazil is having a tough time. The real is plunging to new lows against the dollar week after week. Yep. Lula's having a difficult time with inflation. India is doing very, very well. But having said that, the growth is plateauing in India right now. China, we've spoken a lot about China. It's been very, very disappointing in 2024. A lot of the value investors are looking at China now and saying, whoa, it's so down now, there's a lot of value there. So as far as the BRICS go, yes, it's very much a dilemma, investing in the BRICS now. And beyond the BRICS to the other markets such as South Africa, Vietnam, etc., there's lots of opportunity there as well. One of the main things to differentiate, of course, in the emerging markets is, are they big commodity producers? Or do they have diversified economies? And that will help you in your decision making.
Is that the sort of feedback that you got in your article as well?
I would say so. I mean, you got to look at it country by country, yes. and that's the best way to look at the BRICS, rather than looking at it as just one big acronym with grouping all these countries together. You got to look at it nation by nation, and that's, I guess, the best way forward according to these investment experts. Yuri, of course, some of these countries, they're never out the news. You mentioned Russia, China. Now, of course, the UK is never out the news. What are your thoughts on the UK?
Well, we had a very interesting article from Nigel Green from De Vere Investments, a frequent columnist of ours. And Nigel's writing about the looming financial crisis in the UK, which he says very much resembles 1976, when London had to go cap in hand to the IMF for an embarrassing bailout. Are we almost in a similar position today, Kim?
I don't believe so. I think the UK is going through what I would call one of its periodic wobbles. It's true to say sterling has had a pretty rocky ride of late, but that's nothing new. Many of us who've been a long time in this industry will have seen sterling wobbles, and we're going through one right now. As far as the debt goes, that is a difficult one to square the circle. The government needs to spend a lot of money. They've promised to spend a lot of money. They're going to do this by higher taxation and higher borrowing. But then you come up against the limits. How much can you tax? How much can you borrow? And I think we're getting quite close to the limits of how much you can tax and how much you can borrow. And I think the current government are going to have to start to cut their cloth more in line with what the tax base will provide them, and also the financial markets will provide them in the term of borrowing. So they're getting close to having their backs up against the wall, the UK at the moment. But I've always found the UK has actually performed well when its back has been up against the wall.
And of course, Ali, you've written about the UK recently, about the families who are leaving the UK and are going to different centres. Which sort of places are they going to when they're leaving the UK?
Well, there's a lot of kind of, I guess, you could say hype around Singapore, Dubai. Yes. These hubs which are kind of attracting the wealthy from the UK. Of course, these hubs are growing. They're growing, but they're going at a faster rate. I guess in contrast with other more traditional hubs like Switzerland, for example. But they see Dubai and Singapore as, really, I guess, quality places to put your money in because of the jurisdictions and the way they adapt to, different crises and also their favourable tax policies as well, which we were not seeing here at the UK at the moment.
Absolutely. And it's interesting to see how the whole nature of these banks in these different hubs is changing. And we have a great question from one of our regular commentators, April Rudin, the digital diva from Detroit.
And great.
And April wants to ask you, Kim, there's a trend towards private banks offering tax planning or insurance along with wealth management. In the past, there was also concierge services. Are these extra services free of charge, or a separate revenue stream? And do clients really want all these services from their private bank?
One thing my father did teach me, there's no such thing as a free lunch. And so we know that any of these services that are being provided to clients, somebody has to pay for them. Mm-hmm. So it's either the bank out of their own pocket to try and capture a greater client base, or one way or another, the clients are paying for it. No free lunch. Do the clients want some of these services? Yes and no. It's all a question of how good is the service? Can they really deliver on this? Some banks can, some banks can't. It's very, very subjective. So I think it's something that's an ongoing process. Many of the banks are doing it, and very, very few, I think, are doing it well.
Well, we'll have to invite April for a cuppa when she's next in town, maybe to team up with yourself, Kim. And of course, you're welcome at any time in the FT studios, because we always enjoy talking to you. Are you around next week, Ali?
Of course. How can I miss my weekly tea break here at the FT Studios? Well, that's all the time we have on today's episode. Thank you, Kim, for joining us.
It's been a great pleasure.
Fantastic. And guys, see you next week.